Even though prices are a bit lower right now, oil is still trading at lofty levels. So you've got to think some people are checking out other options.
So here's the question. How high will oil go before alternative energy sources start looking financially attractive as investments? Our Fox panel here to discuss. We have Jim Petrakakis from U.S. News and World Report, Adam Lashinsky, senior writer for Forbes. Joran Brook is from the Ayn Rand Institute, and Peter Schiff is author of Crash Proof and, of course, with Euro Pacific Capital. Okay, Adam, take it this morning and this afternoon as you look at overall the picture and what's been going on. What do you make of this trading right now, and does it become attractive to get into these different sources of energy if oil gets so high?
Actually, Liz, it became attractive quite a long time ago. I've been reporting on this topic for the better part of the last year and a half, and over, venture capital and energy industry investors tell me that they think that alternative energy investments are attractive anywhere above $40 a barrel. And I always ask these people, what happens if the price of oil does drop? And they say, look, first of all, it's not going back to 60, let alone 40. We're not seeing those levels again. We're off to the races. Now, that doesn't mean that alternative energy is going to be price competitive with oil and gasoline immediately. It does mean that they think that they can invest safely at certainly at $100 a barrel and far, far lower.
Well, you know what the Saudis are thinking is that there's a danger that these high prices could eventually suppress demand. That is, the prices are so high, folks will get into other stuff, and eventually we'll have more oil and a glut, and maybe that'll cause a dramatic decrease in prices. Are the Saudis right?
Well, I think
excuse me, go ahead.
Sure.
I doubt it that the Saudis are right. I think we're quite a way off from having these alternative energy sources. And I think the whole market for alternative energy is completely distorted by the government subsidies for ethanol and the government involvement in research and development. I mean, the best thing the U.S. government can do right now in terms of alternatives is get out of the way, deregulate nuclear. I mean, that would be the biggest benefit that they could give us, is allow for some nuclear power plants to be built. Get out of this way. It's interesting to me that the venture capital firm Kleiner Perkins just hired as a partner Al Gore.
Yeah, they
in other words, yeah, and they hired him in order to lobby Congress for more ethanol subsidies because they've invested in the ethanol business. I mean, this is how alternatives are being corrupted by these government subsidies.
Peter Schiff, does the government, by helping out, corrupt the system, as Joran suggests?
Well, potentially. I mean, the government usually corrupts whatever it gets involved with. But, I mean, we've been investing in alternative energy for years.
Which ones?
Well, I'm investing in wind power and, in all sorts of other, agricultural companies that are involved in alternative energy. We've been investing in uranium and nuclear power. But, just because, or the way that oil is being driven by inflation, remember, it's inflation that is causing oil prices to rise. Inflation is also driving up the cost of providing alternative energy. So it's not just that oil is getting more expensive, everything is getting more expensive. And also, what's going to happen is once the Asian currencies really take off, once the Chinese move away from their dollar peg and allow their currency to take off, and I think the Chinese yuan could triple or quadruple against the dollar, then even if oil is $150 a barrel for us, it could represent a substantial decrease for the Chinese, and they'll just use a lot more of it.
All right, Jim Petrakakis, we owe you one. We're going to start with you in the next panel section. Unfortunately, we're up against a hard break, gang. Well, shoppers...
So with the cost of Thanksgiving going up, at least according to some calculations, is it safe to say inflation really is cooking as well?
By the way, before you kill the turkey, according to my Nicaraguan wife, you have to feed it rum so that they're drunk and don't feel the pain as much. We'll get into all the details when we go into commercial break. Now, we throw that question out to our panel, the inflation question. Joining us this time with all the regulars is Mike Norman from Economic Contrarian Update. And by the way, Adam Lashinsky, we are terribly sorry. Adam, you're a senior writer at Fortune magazine. We were giving credit to a competitor. So because of that...
Apology accepted.
Thank you, Adam. Let's start with you. Inflation, what do you think?
I don't think it's a major concern. It's always something that needs to be looked at. The biggest cause of inflation right now, the biggest worry are all the things that China and India are buying, oil, commodities like steel, and grains as well. The biggest reason gasoline prices are going up is because so much corn is being used for ethanol, not really because of core inflation in the American economy.
Mike Norman's still trying to figure out how to get the turkey to drink the rum, but
that's what I'll tell you in the commercial break. You don't want to hear it.
Turkey drinking the rum. I'm going to be drinking the rum. Okay, I'm going to be drinking the rum.
What do you think about inflation?
Listen, I agree with Adam. I don't think it is a terrible concern. Obviously, we don't like to go to the supermarket and have to pay higher prices. Here is the, when we make these comparisons in nominal prices, you and I had this discussion before. You can go back and say, hey, look, I paid $3,500 for a brand new car in 1965. Now it's $20,000. Therefore, that's inflation. It is not. The fact of the matter is we work less to afford more nowadays. That is a better way to look at pricing as opposed to flat prices. Of course, they're always going to rise. Economies grow. Prices go up. However, if it requires less labor on our part to consume the same amount of goods and services, that doesn't mean there is inflation. And that's what we're seeing happen. Wages are rising now faster than the rate of inflation.
Well, Jim Petrakakis, Mike brings up an excellent point. That is the increase in productivity. Actually, the Federal Reserve Board looks at productivity as one of the factors to decide whether it's going to raise or lower rates. When there's more productivity, that means inflation is a little lower, right?
That's right. Listen, over the past 25 years, we've had an incredible disinflation where inflation has dropped from those, terrible rates of the Carter years to a very low level now. And over the last 15 years, productivity has really boomed. The most recent productivity numbers were very good. So I agree with the panel that, I don't think inflation is a huge problem. Now, we always focus on those consumer price numbers, but we always focus less on the income numbers. Some products may be more expensive now than a year ago, but we're also richer than we were a year ago. So it's more than offset that.
I know that Peter Schiff is going to disagree with that, but why,
gold is irrelevant,
Peter?
by the way.
Explain why you're right and Jim might not be.
Well, I don't even know where to start. First of all, to Mike's comments, now it takes 2 paychecks to afford what 1 paycheck could buy in 1970.
No,
so we're not getting richer.
We're talking about in hours.
Mike, I didn't interrupt when you spoke. All right, I waited patiently. All right. Now, number 2, inflation is a big problem. We're creating a lot of inflation. The way it works is the Fed prints money, Americans take that money and spend it on imported products, and now the Asian central banks end up buying that.
Oh, my God.
And the Saudi central banks end up buying those dollars. They create even more money.
Let him finish. Go ahead,
It's all this money creation that is causing prices to rise. It's why oil prices are rising. It's why food prices are rising. And it's why they're going to keep rising.
Prices
and Mike, if you understood anything about inflation, you would be making money instead of losing it. You would be long oil. You would be long gold. You would have made all these horrendous calls over the years.
Now it's you hurling the personal attacks. First of all, let's go with this idea that it takes 2 paychecks. I'm calculating the amount of hours it takes to consume a certain good, let's say a car or some standard basket of household items. If it's 33 hours and it used to be 40 hours, then that means, okay, maybe there's 2 paychecks, but it's, 16 and a half hours each. The fact of the matter is less working hours to consume the same basket of household goods.
That is just not true. Our standard of living is falling. Americans are going...
Every time you say the same thing, whenever the facts are given to you, you say the numbers are wrong.
Why
don't you go to YouTube?
Guys, hold on a second. We'll give you a chance to argue this during the commercial break, but you're on. I want to hear what you think.
I actually agree with Peter. I definitely think there is inflation. I think the government printing money not only is causing prices to go up, and prices will continue to go up with this weak dollar as we import more goods. But the printing of money by the government is what causes all these bubbles and crashes. So inflation is not only reflected in prices, it's reflected in all this misallocation of capital and distortions in the market.
Thanks very much, Robert. A key member of the Bush administration is changing his tune as to what should be done about the troubles in the mortgage markets.
Treasury Secretary Henry Paulson telling the Wall Street Journal, quote, "This is not business as usual. This is an extraordinary situation." Now, he's calling on Congress to pass some kind of legislation that would provide relief to homeowners and encourage lenders to work together to assist borrowers.
So if he's worried, should everyone else be? Let's ask Mike Norman of the Economic Contrarian Update, along with looky who's back from Italy.
Buongiorno. Buongiorno.
Tobin Smith from Change Wave Research, Adam Lashinsky, senior writer for Fortune, and Peter Schiff, author of Crash Proof. Did you bring us truffles?
You know, I tried to, Liz, but we ate them before we got home. At $5,000 a kilogram, now that is where inflation is.
There's
really.
inflation.
Exactly.
All right, Hank Paulson's a little worried now. He's calling it a very serious situation. Are you?
Well, I mean, I am worried. I would use the analogy, which is, you know, maybe it isn't it. But listen, when you put dynamite into a lake and it blows up, the little fish come up first. Then the big fish come up last. And what now we're waiting for...
How many times have you done that?
Yeah, well,
That's how it goes fishing.
I was in Scotland, I know, that's another story. But, you know, we're waiting for the big fish to come up here, all right? So, number one, there is an issue there. Number two, the issue with credit derivatives, these CDOs, the other issues out there, are on this sort of downward spiral. But let's not, you know, let's separate subprime from regular mortgages. The scary thing was the write-down that Freddie Mac and Fannie Mae have had. That's on prime mortgages, guys. That is not on subprime mortgages. If it leaks, if this contagion leaks into the prime mortgage world, that's where the problem is, and that's what Paulson's scared.
Well, and Peter, Paulson is head of the Treasury, and the Treasury's the one, if Freddie Mac and Fannie Mae go under, that has to use our money to bail them out, right?
Well, we'll see. That's the question. You know, it's an implied guarantee, so we're going to have to find out. And I think that's going to be tested because, as I said, Freddie and Fannie are going to go bankrupt. But, you know, going back to your question about, you know, the government doesn't have to force the lenders to work with the borrowers. They're going to work with them. They're going to restructure these loans. I mean, the problem is people overpaid for these houses. They can't afford the mortgages. The only way they can stay in their homes is if the lenders forgive a significant part of the mortgages, and they will do it because the alternative is you foreclose, and when you sell the house, you're not going to get more than 50 cents on the dollar anyway. So they're going to work with the borrowers. But the ramifications for our economy and for the financial community, for lenders, for the dollar is horrific.
Peter Schiff, we can assume that you don't see value in things here in the U.S. Where do you find value? What are you buying right now?
Well, I mentioned last week we're buying the Swiss franc. Today the Swiss franc hit a new record high against the dollar. You know, the Canadian dollar broke parity with the dollar recently. I think the Swiss franc will be the next currency to do that. It's about 90 cents right now. It might hit a buck by the end of the year. You know, there is tremendous risk in the U.S. stock market. The market's going down. They should sell bonds, too. You know, stock. People need to understand these risks.
Toby, I got to say, I have a good friend who's a currency trader, made a lot of money. He says when idiots like Chavez and Ahmadinejad talk down the dollar, that's the time to buy the dollar.
I'm sorry, I think the bottom was when Giselle said that she was getting paid. Look, there's some interesting dynamics here. I just off the computer here. 52-week highs to 52-week lows. It's 28 times more 52-week lows than highs. Just similar to August, to build your point of August this year, similar to July of last year. Go back over the last 5 years. The bull markets don't die when the Fed is cutting rates. Bull markets don't die when the price-earnings ratio of stocks is at 14 or 15, you know, moderate high. They don't die with 4.8% unemployment. It just doesn't happen. What does happen is you have corrections. Let me finish, Peter. They have corrections. And when you have a correction, it's very scary. And it sounds and feels bad, but if you look at every correction we've had for the last 5 years, it has been a buying
Adam Lashinsky.
When the Secretary of the Treasury, Hank Paulson, says that this is an extraordinary time and this is not business as usual, we should not be surprised to see the Dow down 170 points at the close. Hank Paulson doesn't know where things are going. We don't know where things are going. That's why it's not time to buy yet. You should be broadly allocated.
Adam, if I could just say this, and to refresh your memory, Alan Greenspan in 1996 called it irrational exuberance when the Dow was at 6,700. We ended up going to almost 12,000. So, yeah, you know, he might be nervous now, but it doesn't necessarily mean he's a great market timer either.
Yeah, you know, if
he's talking about the economy, not the stock market, and we now, Mike.
Yeah, and if you look at the U.S. stock market, even though we're only about 10% off of our peak, that's because of the multinationals. If you look beneath the surface, if you look at every single U.S. company that is exposed to our economy, these stocks are 20, 30, 40, 50% or more off their highs. So they're showing there's a recession. If you guys want to find a bull market, don't look at U.S. stocks. Look abroad, or, look at gold.
We still have Jim Petrakakis with us. Jim, what do you think?
I think these kinds of opportunities come along. Look, if you're bullish long-term on the economy, you got to be bullish long-term on the stock market. So you should almost embrace these periods of weakness. Time to get in. I agree with Mike. I think we've probably reached a bottom here in the dollar, probably a peak in oil. I think 2008 is going to be a lot stronger and a lot better for investors.
All right, we're just minutes from the closing bell, so stay tuned. Much more ahead as we go in.